is there a vending machine I can go up and say, hey, I need a couple $100,000. If I push a few buttons, I get it. Will I go do that? Yeah, probably. Are you going to get the most, like the best, most exceptional founders coming through this type of model? Unlikely. Or it would be sort of like a novelty thing on top of it. Oh yeah.
What's up, Jess?
Trying to urge to make a episode 69 joke, so I will not. Nice. Episode 69. A milestone for anybody. A milestone for those of us in crypto. A beacon of consistency. And I think only one missed day in there, so that's kind of fun. Got a great show for you today. But first, Josh, how we doing? How's the surf?
Oh, great. I'm doing well. I always like conference weeks because they're a little quieter on the internet. I feel like I didn't see a ton of Denver stuff though, so I'm curious what happened. Like, was anyone actually there? I know some people were, but I feel like usually you see a lot of pictures and videos and commentary from these conferences, and the timeline seemed eerily quiet about it. So don't know if that was just my experience, but.
Yeah, you just been hanging out with the meme coiners too much, and they didn't go to East Denver.
I think that's probably what's happening. Yeah,
my timeline's got a bunch of it, but
okay.
Sounds like it's a bit smaller, and early reports are thumbs up.
Good. All right. Nice.
Yeah, I think it seemed a bit smaller, but
not bad. Not a bad thing.
Not a bad thing. Yeah. And then Peace, how we doing? I want to talk to you more, Peace, just so I can see your Muppet anime. So how we doing?
I'm doing good. The Muppet. It's a capital P puppet here. We're celebrating Bitcoin. Bitcoin Muppets. Oh, yeah. Brutal. Yeah. Looks fun down here.
Well, here's the funny thing about all these, like I'm seeing all these talks come up and they're all like cut in so much on the stage. And from my experience being at ETH Denver, the way they do all these sort of stages is just so bad. Like you're in the middle of a floor of 1 million people and there's probably 7 people that you forced to come sit there and listen to you, but you got the shot. And I think 0x Jim was tweeting, he's like, you could just like rent a studio, say you're at ETH Denver, and save like 10 grand for the whole thing.
That's hilarious.
The kids are all right, man. The kids are all right.
Genius.
But we got a
Denver satellite event in New York City.
Well, that's what everybody's saying. They're like, this is fun, but could we go do it in a city that's not Denver? Do whatever. Nice to see people talking about panels being shit. They continue to be shit. We all know they're shit. So same old stuff. But just with the sprinkling in of a fear, I guess, from some market moves that
seriously, yeah,
consistently remind us of how new a lot of people are in this space. So good times. Anyways. We won't get locked into that. We got a great show for you today. We are going to talk about the newest release from Tribute Labs, their ADIN autonomous investor. I had a quick look at that, or an early look at that a couple weeks ago, so we'll chat about that. Blackbird launched their Fly token. I mean, we've talked about this on the show a few times. Just like most people don't get what Blackbird's trying to go do. And then there were some open questions around their token model and stuff like that. So we have some answers on that, which is interesting and might inform. Well, it's another example of a strategy that is being run, but feels slightly different given the category it's going after. We're going to talk about Pump AMMs and the dynamics that can emerge from that, and the knock-on effects for Radium. Greg can't sleep. I didn't know Greg could sleep. I don't even know who Greg is, and a whole bunch of other fun stuff. So, yeah, cool. All right, well, let's we have a big list of news. We're going to jump in, and I think there's some interesting points in there. So where do you want to start, gentlemen?
Yeah, I mean, let's start with ADIN. So this came out of the Tribute Labs team, who, they've been experimenting at kind of the intersection of capital formation and DAOs for, I don't know, as long as anybody. Kind of instigators of Flamingo DAO, the Lao, a lot of kind of the OG investment DAOs that got people excited back in the last cycle. And I think they've kind of continued experimenting with that model and putting stuff out. And their latest release that I know Aaron's been thinking about for quite a while is kind of around this idea of an autonomous deal investment network, which is what ADIN stands for. So this idea of, can you actually like simplify or streamline or speed up a bunch of the kind of diligence process of these investment DAOs with agents, with teams of agents. So yeah, essentially it's a network of agents that review and analyze deals. They kind of collectively vote on whether to support it, and then ultimately like predict the valuation of the company. And I think if I understood it correctly, that kind of gets put towards the investment DAO, and the humans ultimately like still make the final decision on whether to allocate or not. But yeah, it sounds cool. I think their plan is to both launch another kind of core investment DAO around it, as well as kind of open it up for others to plug into. So yeah, I think, really the focus here, it seems like, is to solve a bunch of the bureaucratic challenges that these investment DAOs have, and really trying to like unlock the original vision of the DAO by leaning into our current AI tools. And I read their posts, and they talk about this kind of vision where it's kind of like a venture capital vending machine almost for founders, with that is really like minimizing human intervention and letting ideas kind of get funded like purely or as much as possible on their merit, instead of all the kind of other stuff that complicates decisions these days. So yeah, maybe I'll throw it over to you guys.
Yeah, Aaron demoed this, and I think a bit more in depth than what they've shared here a couple weeks ago at the Union Square Ventures AI demo day, and so we got to see it. And yeah, it's cool. I mean, I think this broader, DAOs with too many humans kind of suck, and so how do we go beyond that? And yeah, so I think there's this broader, whether we talked about cognitors in the past, I think there's this sense that AI is going to be able to go do a lot of the messy stuff. And so yeah, they built those things. I think it's interesting that the concept of multiple agents going out and doing things, doing work, coming back, compiling, and then showing to the voting community. I think makes a ton of sense. There's an interesting referral mechanism here, so you can basically just refer a deal to them, and I think you get 10%. I guess there's a sense of being able to just lower management fees and probably time to actually do deals, etc. So yeah, I think it's interesting. I think the question for me is like, where does this make the most sense? And I think obviously coming from where we spend most of our time in early stage deals, where you're trying to find non-consensus opportunities, you're probably backing them before there's a product and a whole lot of details after. Like this just it, and that those founders are looking for a lot more than just money. And I think that's an important point that kind of puts this into a bucket that's I would consider more of like a new type of funding mechanism, rather than one that I think is just going to come in and disrupt how early stage deals get done. The business of VC is convincing people to take your money. That's the hard job. And so I think this path here is going to convince people who want easy money, of which that is a clear path. And I think there's some novelty here around it. The open question in my mind is just like, we've raised from a bunch of investment DAOs. Great to have their money, but there's not useful support that goes on beyond that. And the structure of those organizations kind of makes that hard. And so this is going to be kind of more of that. So I think it's like this, is there a vending machine I can go up and say, hey, I need a couple $100,000. If I push a few buttons, I get it. Will I go do that? Yeah, probably. Are you going to get the most, like the best, most exceptional founders coming through this type of model? Unlikely. Or it would be sort of like a novelty thing on top of it. The thing that's most interesting to me is just how much more thorough you can be on things like diligence, on ensuring that, if we think about it from a functional perspective in the DAOs, most people just don't pay attention. So how are you able to like quickly and easily and with a fullness actually communicate what's happening here, etc. So my sense is this is good probably for seed, maybe seed, Series A type of deals. My worry is that they'll sort of anchor on what has been before rather than what might be. But I think again, that's a seed A, B is probably a really good place to go do that. And I think there's going to be a lot of really interesting things that could be kind of rolled out here. And I know they want to go push. I think should be pushing in a direction to really make investment vehicles, be on chain and get all the composable and sort of global benefits of it. And so I'm excited about the work they're doing there.
Yeah, like that's kind of my takeaway too, is that this actually just feels more empowering for existing firms than being like a thing that's disruptive or is going to like introduce, a new way to invest potentially. Because I think to your point, like this doesn't solve the core challenges that we see in investment DAOs, which is, consensus decision making is a bad way to invest. They often, kind of suffer from the tragedy of the commons in like their support systems and deal flow sharing or deal flow taking, depending on who you have as members. And to your point, like the way that you win deals it's not decision speed, right? It's relationships and being able to offer support that others can't. And if you have more options as a founder, you're going to take money. Are you going to take money from like the vending machine that is just kind of pure commodity capital, or are you going to take it from the firm that wants to lean in and is obsessed and is going to do everything they can to help you succeed?
I think what we'll see is these types of things, like this being applied to VC generally, probably makes, I think is more novel and more operationally focused or beneficial. But I think what new categories could you apply something like this to, right? So could it be like what would Slow's creator model plus
totally
look like? Or what would we've been thinking about a few of these things. Like how do you go serve this sort of, solo or, two developers that are really building ephemeral applications and at a high speed, and the belief that some of those are going to hit, right? And so I think there's more interesting ways you could point this to unlock maybe more specific deal types where the novelty of the new deal type and maybe like the type of deal you're supporting isn't one that's trying to go be a multi-billion-dollar company, but rather, tens, hundreds of millions of dollars valuation, throwing off some cash, whatever, right?
Yeah, totally. I think even like Pioneer kind of had this interesting kind of like accelerator hackathon hybrid thing where you would basically go participate in this like game and it would evaluate you over time and decide to invest off the back. So I think that could maybe be like that plus this could be pretty interesting. And also I think, was it Clearbank that was investing in SaaS companies, or at least giving SaaS companies new financing options, like basically like purely based on their kind of MRR or ARR. And I think something like this could fit pretty well in that world too. So,
I mean, we were thinking about this the other day of how do you go do so factoring is kind of, Shopify can offer loans with more confidence and cheaper than say banks because they have first party data. They know how much a store is selling. I mean, you're just describing like a superpower of doing something on chain. But I think, so how could you go do something that is focused on generating revenue where there is more of like a holdco or profit share or, So yeah, I think I love the chaos that's going on in your house right now, Josh.
They're trying to put, there are multiple families trying to put kids down for naps. So
nice. All right, let's, I think one to watch. My sense is they're probably going to go raise a fund for this, which I think will do well. I think there's novelty here and it's interesting. I think people will participate from the sort of scouting side of things. And I think there's just like a lot of other interesting things you could do on top of this. So, but I think it's interesting to look at like, Tribute and C Club going after like similar intents with very different starting points and very different intentions. And I think it seems like Tribute is really about efficiency of capital, speed, and building the tools and mechanisms. And what they've built for Tribute Labs, DAOs and stuff has a lot of AI in it as well. I think that's kind of where a lot of the stuff has come from. And I think maybe where we're coming from is trying to really optimize effectiveness. Not to say that this isn't, but
well, I think the thing, really I think the big thing that we've realized is that there are things that networks are good at, and you need to go let the network do the things the networks are good at, which is like at scale participation, kind of capturing this like sense of belief, community, social context, like all this stuff that is really important. But then you also need to let these like kind of smaller high agency teams that need kind of fast decision making, non-consensus insights, which is kind of where investment falls in our minds. But
I think my general take is more teams, platforms, individuals trying to bring more money to innovation. Let's fucking go. So if they can increase the velocity here, new teams getting funded successfully, that's game on. Let's go. All right. Well, let's talk about restaurants in New York City, the most global relevant project we could talk about here.
So Blackbird, who I'm sure you all know, but whatever, kind of came up as the kind of like foodie loyalty app in like the cool restaurants of New York. And this week they announced Flynet, which is their restaurant payments and loyalty L3. So I think one thing that's actually cool is they're calling it a restaurant transaction network, which I think is actually kind of cool framing. And they kind of talk about it as existing to process transactions and memorialize actions that take place in Blackbird's restaurant network. And I don't know. I think
great. I read that. And
it was great.
It's like, why do you need your own blockchain? It's just to memorialize actions on our platform. Fucking A, sign me up.
That sounds great, right? And I think even calling it a transaction network, it kind of positions them against like, Visa, which I think really who these restaurants hate, right? These restaurants are operating on like razor thin margins. These credit card companies are super extractive. So the idea that there's this transaction network that's way cheaper that they can actually also own, I think is pretty novel and important. So it feels like a pretty, I don't know, it's a killer use case of stablecoins and interoperable data, I think. So in this, highly fragmented industry with low margins and, restaurants have no visibility into who their customers are. It's kind of hard for like a single restaurant to really stand up a meaningful loyalty program, but, being able to participate in this kind of loyalty network, I think makes a lot of sense for them. So, it sounds like they have some good success so far. They launched the product first. People liked it. I think they have 500 plus restaurants across New York signed up. And now they have a chain that they're going to go do some stuff with.
Yeah. So I think, the most I consistently see people misunderstand what Blackbird was going after. And, I think when you look at it through the lens of payments and the pain restaurants feel from that, and just this general, like, it's very hard to coordinate and to align in such a fragmented market. And so an opportunity to aggregate that disaffective group of individuals or of businesses, and then ultimately give them something that kind of comes over the top of their current payment platform, but it has a ton of incentives to like push more payments through it, right? So, you're paying 3% to plus on a transaction on a credit card in a restaurant right now. I think Flynet has a 2% fee, but returns 1.5, like 3/4 of that back to the restaurants in loyalty tokens that they can give out and use to incentivize. So kind of an applied 0.5% fee. And so it's like a big thing. And I think we're seeing this come up in a lot of stablecoin conversations right now, where why are people so excited about stablecoins? Well, because Visa has a 3% tax on economic activity.
Mm-hmm. Which is crazy. When you're operating on like 3.5 and 3.5% margins as a restaurant or something, like if you can get like any amount of that you can get 100%. Back, fundamentally changes your business. So
makes a ton of sense. They're taking a very sort of, density matters quite a bit. So they're really targeting a good rollout. Obviously, Ben is a very experienced entrepreneur and they've got a great team over there. The biggest open question in my mind was like, people were treating the Fly token as if it was like going to be liquid at some point. And I was like, there's just no way that's going to be the thing. This Fly token is not going to be the speculative asset that you can. And so my question really was, how do they go land this? And it looks like the way that they're landing this is through Flynet, right? So it's Blackbird built on Flynet. And it looks like they have a 2-token model. So they have Fly and then they have F2, and Fly is the loyalty point. So they don't even refer to it as a stable coin. It's a loyalty token. And
but it is right. Like it's like a fixed kind of like redemption price or something. Okay.
Yeah. So you can use it for redemption within their partner restaurants. But it's sort of a sort of depending based on how much you hold, how much you've spent, how much Fly you hold, how much Fly you've spent. You will get a portion. There'll sort of be these airdrops or I guess distributions of F2 that sort of represent ownership, and then F2 will also be the transaction or gas token within their network. And so they sort of, so that's how they're landing the plane. They have 2-token models. They've identified. So I think that the calculation is Fly throughput for a period over Fly throughput for a period times total F2 distribute. So they've got it all broken down in their white paper or Fly paper V2. So I think that's interesting. And I think conceptually, this idea of being able to go into a category like restaurants and then be the financial infrastructure for that, it makes a ton of sense.
It does. A ton of sense. And it makes a ton of sense for like restaurants to, have some ownership in the payment network that they're all relying on.
Yeah. So this Flynet, I want to say Flychain. Flynet is a L3 that settles to Base.
It seemed like they were doing something. I didn't look too closely into it, but kind of cool with how they're actually distributing F2 tokens to fly holders. I think there was like 7 kind of like milestone based like unlocks that happen. So I don't know, probably transaction based or something. So as they kind of get more and more usage, have more confidence that, you know, this thing is actually a good business and spitting off fees, and, you know, potentially can go use that to kind of increase the value of that network, then more fly gets unlocked versus just kind of whatever 10% of it getting unlocked today, and, you know, it having the
I love that
having the impact that, you know, we continue to see in airdrop. So I think that's cool.
Yeah, I mean, I obviously don't live in New York. I probably have, I think I've claimed a few fly, but it's just not super relevant. But I think we're sort of in this era right now where there's these great apps that people will just go use and not really even know that it's crypto behind it. You know, I'm a Canucks fan, so I'm prepared. Canucks fan and crypto guy, so I'm perpetually disappointed, which I love. But, you know, Polymarket is literally, like, it's on my side screen here, right? I was sitting here last night watching the Canucks game. Oh, we're good. Oh no, we're fucked. Too bad. Whatever. Polymarket open right here, and it's just a lot of fun. And so, like, these tools that are kind of like crypto rails in the back end, you know, and I'm just thinking about Polymarket, and I think Flies or Blackbird's another good one. People just doing the thing, and all of a sudden an airdrop happens, and you all of a sudden have ownership in this network, and that being this sort of positive experience that really starts to drive things forward. So love it.
I think it's also like indicative of this, like, you know, post chain maxi world, right? Like, Polymarket's on Polygon. No one fucking cares. There's no Polygon maxis being like, you know, trying to get everyone to go use like Polymarket, right? And I think it's the same with Fly. Like, these are just useful products that people want to use, and, you know, they'll, you know, bridge to whatever chain they need to. Ideally, they just don't even need to know about it.
But this is the thing, right? The onboard Polymarket was one of the first to do this, and we're seeing it now, which is just like, here's our world. You want to come and play in our world? Send money to this address. You don't have to worry about anything else. You can use your credit card, and then it does have all the conversions in the background, and so that's just, you know, standard table stakes right now. But back when they did it, was pretty freaking novel. So, just so you know, I'm still up on my Canadian election bets. Doing really well, and then we got a bunch of you know, we got some runners for the NHL Stanley Cup playoffs here that we're gonna go cash in on.
Yeah, but I've had a few experiences where my stream was like a few seconds delayed or something, and you have Polymarket open, and you see there's like a spike in one direction. You're like, oh fuck.
Man, watching it, I feel like they have to have some bots that are sitting there watching games or something, because the instantaneous market reaction to even things like power plays or goals were crazy.
Yeah.
Crazy. And these are very small markets. Anyways, let's not get lost in my betting. Games of skill on Polymarket. But yeah, I love this stuff, man. I think like this is, I don't know. I love freakouts on the timeline when, if you just step back and you just see all the progress being made. It's like, all right, this is our time to shine, baby. Let's go. So yeah. I guess we got to make sure we take advantage of Blackbird when we're in New York next time, Josh.
Fuck, man. Last time I was there, I tried, but my app store is in Canadian, and then I tried to switch it to the US, and then I had to have an American credit card to actually do that, and then I just gave up. So when Canada then. Yeah. Montreal's a great food scene. Let's go.
Oh my God, it's definitely the one to go do. All right.
Let's jump here. Yeah, we got Zora coin. So I think they released this like last Friday, an hour before our show. So we like very briefly touched on it, but I think we can go a little deeper now that it's had some time to settle and we actually know what it is. So they announced an upgrade to their product and protocol at the end of last week, where, you know, pretty simply, like, all posts now are just instantly tradable coins. So on post creation, basically a single-sided liquidity pool gets added to Uniswap, and, you know, when people collect or buy now, they just buy against that pool. And this is kind of a transition from, so initially they had additions where, you know, you could buy and sell NFTs. Obviously the like liquidity of that market wasn't great. So kind of their next solution to that was this hybrid NFT liquid token model. I think they probably like thought that, I don't know, there's some value in like the non-fungibility of these NFTs, and, you know, how that actually allows you to collect. But I think just saw downsides in in kind of the complication of it and confusion of it. And this release really just leans into this kind of liquid token straight to market world that Jacob's been talking a lot about. So Jacob also dropped a good post today, kind of talking a bit more about his thinking behind it. And really his thesis is basically that, you know, content's inherently valuable and also wants to be freely distributed, but the ways that we've had to monetize content so far kind of fights the like basic physics of the internet by needing to lock it down. So whether that's ads, subscriptions, paywalls, you know, whatever. And, you know, he thinks coining content potentially the solution because it allows it to be, you know, freely accessible across the internet while also creating an open, liquid, permissionless, programmable market to discover and trade its value in real time. So he had a good quote in the post where he said, the more widely spread and traded, the more valuable it can become. Creators capture value in the coins they own. Platforms capture value when they show the right coins to the right people at the right time. And consumers capture value by owning the coins for the content they find important, fun, and useful to them. It's a win-win-win. So like anything Zora does, it was, you know, pretty polarizing when they released it. Lots of people, you know, loved it and were talking about it as the future of the internet. Tons of people hated it, you know, saying that this is just kind of further disenfranchising artists or whatever. And I kind of feel like a lot of that pushback is just kind of a disconnect in their positioning from being kind of this like art platform, or at least like their perceived positioning because of where they've come from. But like clearly their actual vision and product strategy and ultimately the big opportunity is this. It's like they're trying to go be this like this mass market consumer social product, right? They're trying to go build the like economic Instagram. Like this isn't an artist marketplace, and I feel like so many people are still like anchored on that idea or something and just kind of hate that they're stepping away from it. But that's just, this is obviously the bigger opportunity for them to go after. So
I mean, I think like on the sort of pivoting and shifting, I think like there's this people hate change all the time, first of all, and then there's sort of like this like, you know, I like this thing, don't go change it, and when you change it, it's bad. But there's sort of like or maybe this is thinking of like, I want to go back to the old thing, but the reality is the old thing wasn't working, and therefore wasn't going to continue to exist, and so that's not an option, baby. Like there's the old thing, like, you know, I think looking at teams that are very metrics and sort of PMF focused, and you know, they need to go make those sort of shifts, and I think people just don't fully grok or understand that, or at least they think there's some way to go back to. So there's no. My sense is every shift that Zora's taken is because there's been some upper limit that's been met in what they're trying to go do, and are going to. So I think we've seen that with NFTs. We saw that with WoW, kind of didn't work, and so we're seeing these continued iterations. There's no going back to a previous iteration; those are failures, even if they worked, and there just wasn't scale, and there wasn't a business to go build there. So this, you know, if we look back to some of the early writing Jacob's done, like you see this coded, this information markets has been coded. You know, I think when we look at the earliest, you know, version of Zora, it was a bonding curve with ERC20s that had a variable pricing to it, right? So this idea of how do you price discovery around cultural objects and like the mechanisms that support that. And so, you know, I think this is a pretty big swing for them. I don't know how it's going to work out. I think intellectually and conceptually, I love it. This idea of, you know, if you can efficiently create long tail markets around content, and then there's some level of success there, and those get integrated into different social contexts. I think there's, you know, like the fundamental business model of the consumer internet has been advertising. There's a good argument to be made here that the fundamental business model for on-chain internet is transactions, right? And so building these models around transactions, you know, clearly there needs to be some speculation available in there, et cetera. So I think conceptually works, but it falls down for me in the packaging right now, because none of that stuff is visible. And so I think that I worry they maybe rush this out a little soon and haven't done the sort of the UX and the design work that actually, like I think that the images they're sharing on Twitter that show all the pieces coming together, and then you go to the website and you go, well, what do I?
What do you want to see? What do you want to see on the site that you're not seeing?
I mean, these are markets. So why am I not looking at something that is more? There should be some more market information there. Like the idea that, you know, if each of these posts, or so an image, and the trading activity that happens alongside it equals information, or
Right.
I kind of want to see that, right? So we're talking about relative value, we're talking about volume, we're talking about holders. So I've seen all of this in various snippets, but and so my guess is we're waiting for another sort of like,
Yeah.
contextualization of this new mechanism in their website.
The biggest thing for me is the unit bias that I have.
Yeah.
Like I want, when I go to Zora, I still want to be able to buy one. But that's not really a part of this new experience. And so it's sort of changing. I just have to start doing it, basically. But
I mean, you can still buy one. It's just like nothing.
Yeah.
Well, right, but within their UX, when you buy it, you just choose how much ETH you spend.
Yeah, you're moving away from this, like,
you don't choose a unit. Like if I could just buy, like, I guess I could look at the price and then type in that amount of ETH, but I can't select.
No, I mean, you're shifting away from the NFT as a starting point is something that they're going to try to get you away from. And
yeah,
I don't know.
I mean, I do think it's Pete. Can you open up like Zora.co or whatever? Like I do think even just like really the only difference right now by scrolling kind of the main feed is seeing like you now see a market cap, which I do think even that is like cool.
Do I see I don't see a market cap.
Yeah, if you go to, let's see if pieces page loads.
I literally see a feed with a bunch of old content on it.
Maybe you're on old content. I clicked a link. Maybe it was I think I clicked the link that Jacob shared in a reply to someone saying like, how do I see all the coins? So maybe it was like maybe it was filtered on new tokens or something.
When I click an individual post, it still is not showing me.
Whew. It's a beautiful image.
Oh, I just clicked on one of Cheryl's posts, and you're a top holder, Josh. Congratulations!
Nice.
23 days ago.
23 days ago?
I think I'm on some some fucking time machine feed here.
Yeah, I think if you see, I'll find the link and share it, but it shows market cap alongside the content in the feed, and I think even that's just like a cool additional data point to just like knowing how relevant something is.
I mean, sure, this image compared to what you see on the homepage right now is pretty big difference. So maybe what am I getting, some old Zora?
I don't know.
Jeez, Jacob, I'm on some relegated media list here now.
Yeah, I think my like general takeaway from it is I think this is right. It feels right. I think they now need to go do the hard work of getting 1,000 times the amount of people on here. Like how do they go get my friends on here? Because I think that's where the experience falls down for me right now. It's like if I think about this at Instagram scale, that's like a really fucking interesting product.
Yeah.
But how do you get there? How do they kickstart the network effects? Because I'm over collecting the content of just random people on crypto Twitter. I want my friends. I want the brands I follow or like the influencers I care about or whatever on here. I want to see what their coins are trading at. I want to speculate on a bit of them. So I think the foundations feel right or as right as they've been to me, but now they just need to go get scale.
Yeah, I love how awkward it feels for a lot of people. To me, that feels like a good sign. Doesn't mean you're going to be successful at it, but at least you're pushing in new directions. So
yeah, people are just they're stuck in the, like to your point, they're stuck in the old mental models of what Zora has been or what NFTs have been.
Yep. I mean, there's a surefire way to be irrelevant in crypto is to hold on to old mental models that are just not true anymore.
Yeah.
And I mean, I think like there is a lot of how do users make money? How are we all getting wealthy using this thing is like the fundamental question. If they can go solve that, they'll have a lot of grace and freedom from their users. I think they don't have that right now, and so they're on a short lead. So
I mean, that's the thing, right? It's like all these takes about what this is it was just kind of over intellectualizing it. It's like really where this nets out is the experience more fun, and are people buying stuff, and is more value flowing to the creators? And I think if those things end up being true, then this will work. And
well, the number one thing is, are people buying the damn coins, right? And I think, people weren't buying the NFTs anymore, or you saw like a upper limit for the open edition era and yada yada. So we shall see.
We will see.
Cool. I do hope that we're in this era of like
Damn.
a lot more people doing new cool shit rather than just copy pasting other cool shit. So
I want to buy. See it. I want to buy one of these so bad.
We'll just buy some instead of one.
I have to buy some.
Yeah.
Can you? What if you click down? If you click down on ETH, can you switch to like number of coins or something, or is it just payment methods? Yeah. Okay.
Well, there's zero volume on this, so congratulations on being volume number 1.
I'm early.
It is true though. Like having to choose how much to buy feels like way too much, like overhead.
Yeah, that's
intellectual overhead.
Yeah. Because you're like, well, how?
Like I don't know how much I want to invest here.
You don't even know what you're getting here, do you?
Right. So I'll do it old school.
And that just seems like that's just an insane number to have to go put in too.
I have 108,000 of these. All right, hold up. Let's maybe get another 0 in here.
Yeah, we should start looking at Zora as more like Pump with a different mechanism, going after a different. So it's like a token launcher integrated into.
I mean, it is, yeah. And I tweeted when I was playing with it last week. It's like, you're buying on Pump, you're buying the chart. On Zora, you're buying the image, and I think just that like starting point has a bunch of interesting downstream effects for the market. It's obviously what talk about content markets and all information having market caps. Like obviously starting or leading with the content and information is important to that vision versus like the Pump game of can I find 1,000x?
Yeah. Interesting. Do we have a sense of, has anybody dug up any data on this shift, or do we even know if we're able to?
I tried to. They were all just like old dashboards, and I didn't know if it was like upgraded to the new protocol and everything. So we'll see if we can find something. We'll get Jacob on the show soon too.
Yeah, we got a bunch of good. We're gonna get Aaron on to talk about the in-depths of ADIN and tell me why I'm wrong about it, and we'll get Jacob on to pump our long tail coin bags.
It's a nice image.
All righty, let's move on.
Okay, let's move on. Yeah, let's go to the Pump AMM.
It's an interesting play.
I mean, it's obvious, right? It's like, of course they're doing this, but I guess maybe happening faster than people expected or whatever. Just the fact that it was actually, announced was news to people. But I think the Ray price dropped like 40%, which is like the Radium token, which is where their tokens currently graduate. And I think pump tokens are like 40 to 50% depending on the day of Radium's volume. So obviously this is like a huge dent in kind of like the economic activity that'll happen there. But this is just what's going to happen, right? It's like this is aggregation theory in full effect. Like you own the customer experience, they own supply and demand of these tokens. Of course, they're going to disintermediate anyone who's like eating away at value, kind of within that value chain. So they're going to launch an AMM. They're going to, they have their mobile app. Is there going to be a Pump.fun wallet? Like, they're just, as long as they continue owning demand, they're going to have every opportunity in the world to just keep eating more and more of the stack. So this is the world we're moving towards.
100%. Just like the most obvious. Yeah, this is like I was gonna say it's kind of like the double click acquisition from Google. It's like, okay, it's not quite, but like there's like a revenue model in plain sight that if you just, instead of linking to there, you link to your own, and all of a sudden you're getting significantly more revenue. You're just gonna go do it every day of the week. So
of course,
yeah. And it's very, I think some of the big criticisms around Pump tokens are sort of like the how inefficient they are around liquidity and fees, etc. And so you could just see this being uber tuned for these types of tokens, and will just print even more money. And I think this insight of like, yeah, they will probably launch a token and they'll probably do buybacks on it, and these will be the sources of revenue that do those buybacks. So
yeah, Yeah,
and I think
more flexibility to, have some value flowing back to the creators, which, seems needed. Yeah, I think, obvious. Yeah, it's obvious.
But I think your point of like, this will probably happen to many other segments too, right? Like you don't see, you're not going to have this sort of like huge partnership list of different infra providers that are coming in to go deliver, some portion of the stack for Polymarket or for Pump or for some other big. They're just going to go, either leverage some of like the very inexpensive ways to go do it. I think the Flynet being an L3 that settles to base, etc. It's sort of, again, they're like, okay, we want to go own that sequencer revenue. We don't want it to go to base. A much smaller amount to go to base. And so if you own distribution, you can go own the business models, and
that's it. It's not the smart contracts that are valuable. It's not the protocols that are valuable, or at least like inherently valuable. If you leverage a protocol or a smart contract into owning the customer experience, that can obviously be very valuable, which, Uniswap has done really well with, their interface and their wallet. But the Radium interface absolutely blows. It sucks.
Well, Radium would have been dead without Pump. Well, not dead, but just like, it was saved in many ways by Pump.
Yeah, like I bet you, my guess is a very, very, very small percentage of Radium volume actually happens through the Radium interface. So they're just asking to be disrupted.
Yeah, I was diving into tokens that generate revenue, and Radium is one of them. And I think they did like $1.8 million in revenue. I can't remember the time horizon. I think it was not a month type thing. So like they are capturing a very small amount of the value that's going through already. No, I think they only have a portion of their revenues that go to buyback. So I probably shouldn't have even opened my mouth on this topic because I don't know enough of the details. But it's low float, high FDV infra tokens that can be disrupted by successful, just relationship owning brands or applications. Just like
totally. Yes. I mean, what's interesting is like, the Jupiter price was like, relatively unaffected. Like they own the customer relationship. Like I doubt Phantom's worried about this. Like people that have
Phantom's showing up doing something even more aggressive. They went and bought Simple Hash and then are shutting it down, which basically just like starves all their competition from, the most used data sources, or one of the most used data sources for prices.
Oh yeah.
So and seeing Jupiter go by Moonshot. So we're seeing this sort of defensive acquisition or offensive acquisitions. It feels very relevant to this other topic that you have here, which is the execution and distribution phase of crypto.
Let's jump to that. Yeah, so the kind of instigation of this was a good thread by Chris Berneski, who was talking about how we're leaving this like early ideologue stage of crypto and entering an era of execution and distribution. So he talks about how the next leg of growth for the industry isn't going to be the promise or rise of some new thing like it has been in the past. It was like, oh shit, DeFi is this new capability. And, that cycle was driven by, the promise or expectations of how kind of impactful that was going to be. And obviously it was just ahead of its time. But yeah, his point is we're at the point where it's going to be, doing the things we can already do better and at scale, and really just building great businesses around it. That's ultimately going to be driving the future cycles from here. And he talks about global savings account, seamless transactions, permissionless capital formation, blah blah blah, as kind of like the core things here. And I mean, we've been talking a lot about this with some of our teams, right? And I think there's just so much we take for granted that if packaged up the right way, it can feel like magic to the rest of the world. But we just need people to go do the hard work of actually building products, distributing them at scale. I think we're out of, obviously, like the easy thing to do is just continue building these little speculative games for crypto natives and capture some value and move on. But we're at the point where I think, we need the founders to come in who are willing to do the hard work of building massive things around the somewhat mature tools that we now have.
It's really, really hard to articulate how impactful the sort of Gary Gensler lens has been on founders for the last 5, 6, whatever number of years. And I think that we're still digesting this shift to, and clearly there's like a big open question around what will the regulations be, assuming they follow through on the promises. But I think this idea of actually being able to go do the thing. So we are going to go create something. We're creating a network, and that together, that network is going to create value, and through their contribution, the participation, building, whatever, and that value that they collectively create is owned by them. And that last piece has been the big blocker, right? It has had to go to your foundation, or it's going, and it's all this sort of stuff. And so the fact that we're having teams do buy and burn, so we're teams that are exploring revenue tokens, all this sort of stuff is the precursor for us to be able to go in and actually go build businesses. So the highest value thing for you to go do over the last while was not to go build businesses, it was to target a token launch, to go do all the things you needed to go do to go get that token launch. And so much of the bullshit that we're dealing with is because that has been the focus. It hasn't been about product, it hasn't been about impact, it has been about launching token with those other things dripped on top of it. And I think we're going to move into an era right now where it's like, yeah, show me the money, baby. Right? Like, show me that doing these things on this chain or together or around this token can create value, and point it to me by showing the value that's been created. We can do that now.
Yeah.
At least that's the mental model people have going into it. So,
I mean, I'm kind of very excited for this phase where, crypto is just, it's mainstream, it's here, it's not going anywhere, and we don't have to like cheerlead or evangelize crypto as a whole. We can actually just go, like, we can just take it for granted and just go build the new things that are unlocked by this tool set, instead of having to like feel like we have to lift up this entire fucking industry, which is just, it's heavy because like there's a ton of stupid shit happening all the time, and it's very market dependent. And
have you felt like you've had to live? I mean, I think
not personally, but I think just that, like, the general sentiment is that we have to, like, crypto is still not this widely accepted thing, and it could still disappear, and obviously that's still true, but increasingly less true. And I think we're past that point. And you don't have to, it's like the early days of the internet where you had to convince people that the internet mattered. And then, like, finally, once the internet was just ubiquitous and everywhere, then you could just go worry about building, cool, useful shit. And
I mean, so much of my mental model's built up around, I think I found the internet in, I don't know, grade 7, 8, 9, 10, somewhere in there. Discovered that whole thing, saw social media early. I mean, I was going to tweet ups, man. Think about how cringe that shit sounds in 2025.
Sounds horrible.
But it was exactly as cringe as you would have expected. But my takeaways from that were, one, knowing how it feels to be early to something, and people just thinking it's absurd. The shit people said about YouTube or about Twitter. I don't care what you eat today. Like, there's just like huge pushback against it. And yet, look at it, it's larger than anybody could have imagined back then. And so,
I think no one has to defend the stupid shit that's happening on the internet anymore.
But we used to do it all the time. Yeah,
exactly.
And you don't have to defend it anymore. That's for sure. Oh, I mean, it's more diffuse, I guess, now.
I mean,
I think
these are crazy growing pains. I feel like this is the biggest struggle in the ETH world right now. It's why people are over intellectualizing Zora's new drop, because they're like, fuck, looking for this ideal log. Yeah. It's painful.
Well, I mean, I think even as we build towards our next sort of big thing at Seed Club, I think we are struggling with this to a degree, right? Where there's the smooth brain is probably the right thing, and yet it just feels so fucking smooth, and it's missing that sort of sparkle. But really, the sparkle is that you can just go do the fucking smooth brain thing and do it well. And that's actually the thing people really care about. And it's like, if we're going to go build a business, give me a gas pedal that I can push, and let's go make iterative progress, build momentum towards it. Whereas if our goal is just to go launch a token, it's a very different starting point. So I think we'll see more. I mean, the tokens that you are espousing, Josh, is very much, I think, very well suited to this sort of new world.
Say more.
I think the idea that one, tokens can represent social capital, and that two, there can be value that flows on top of that. It's just a very simple idea that's embedded in every valuation of a token around. So there's maybe just an opportunity to say that simple thing,
or just deliver products that make that really obvious.
That's it.
Yeah, exactly. Like having to bring something to market with like a white paper or some like big manifesto explaining why this is like, that's, no one cares, you know, or most of the world doesn't care.
Fly paper was a bit of a shock to me.
Yeah, I mean, maybe, you know, they're probably writing that for restaurants, trying to convince them why this is like a cool idea, but like that's not going to make or break your success. It's, can you get this product into the hands of people who find it cool?
Yeah,
we don't. Yeah, having to not appeal to the ideologues, I think, is a good place.
Well, I mean, this is so many of the debates on crypto Twitter today. You know, the Ethereum Foundation. I mean,
oh, did you see that graphic or whatever?
What the fuck are we doing here, people?
What even like words are they using? It's like
why?
Like, I shouldn't need a dictionary to understand
which graphic.
Go to your home feed. It's probably there somewhere.
Ethereum Foundation Twitter account is. I mean,
face palm, just
this one.
This tweet.
Like, scroll up. The EF Solviculture Society, like, gone. I'm done. I'm scrolling past. I don't care. And then this graphic doesn't make me want to hang out anymore.
The problem is that it was within, it's like the context of everything that's going on around it. This is the tweet you want to send out. I'm actually with him. I don't agree with Amin on a lot of things. Appreciate him as a human being. His take on communism coming into the Ethereum is one that I was like, what? Oh, okay.
What do you say?
Oh, he did a presentation at ETH Denver about Marxism infiltrating blockchains and why not to do that. I don't know. It had a better title than I just said there. So at least there's a good debate going on around it. But this isn't the fucking topic we should get into. People.
No.
But I think it is. Maybe it is through the lens of this sort of execution and distribution phase, right? Where you can just ideological belief is what drove the 0 to 1 for early adopters, but early majority don't give a shit.
Exactly.
So it's really about what's in it for me here, and I think that's the kind of core issue here.
And ultimately, like the type of founder you now need in crypto to do the like, use the tools we now have and make them better and distribute them at scale are not the people that are going to respond to this, right? And then guess what? They go build somewhere else.
I mean, the teams, many of the teams that are doing very well right now are, at least in our portfolio, well, we have a fairly wide roof, but there's a group that have been, multiple time founders, learned the lesson of distribution, hyper focused on that. And they make progress every week. What a phenomenal thing to be in, rather than being at the whims of some fat-fingered whale, nuking the Bitcoin chart.
Or stuck in ideological debates about chain architecture or something.
Bone marrow.
I think it's like, I want all those things to be happening. The issue is that those are the only things that are happening, and there isn't kind of like a rallying cry for where we're going here. I mean, I also, I don't know. Yeah, I don't come at the sort of ETH situation with a huge negative bent on it. I think there's also like this is what you get with being the world computer. Yeah, you're going to have a messy organizational structure around it. So,
see, I like this because this week I've been listening to Nerd of the Rings. So I was I'm fully prepared for this.
What is that?
Yeah, you do not. You're a puppet. You got to keep talking here.
Nerd of the Rings is an amazing YouTube channel, basically, where this guy just kind of narrates through the known histories of the whole world of Tolkien. And it's useful because you get to understand the mythology and of Tolkien. And it is useful because every protocol that was created before 2020 was named from someone in that body of work, basically. That's not true. Like 5 or 10, though, were.
All right.
That's
Well,
all.
That's it. That's it.
That's it. Yeah,
All right.
it's just
Okay.
it's just good. It's just good nerdy shit. It
I
preps you for this kind of thing. It's just good nerdy shit. It preps you for this kind of thing.
just love that
You're
I can
like-
go into this conversation for the piece and not know where it has started or if it was over.
Yeah, fair enough.
You
The
like
more
you like
I
rings.
look at
You like
the
this
more I
being
like
green
it.
and a circle of people, basically, is what you like. It's ring.
and that they've made up funny words like the Silviculture Society. It's
I think
just
that's a
like
thing. I think
that's a thing?
silviculture is
it must be a thing. Yeah.
Come on.
The art and science of managing establishment growth and composition, health, and quality of forests on a sustainable basis.
Sounds made up. Okay, it's about
No, if you want some
God damn it.
mythology, start diving into trees talking to each other through
Dude, the ends.
mushrooms, dude.
The ends.
Yeah.
Yeah, it's fucking wild. All right, this is not what I wanted to get into today. EFBS, go have fun, do your thing. Don't really care.
They're not
Regen
beating
them.
the regen allegations with this. It's crazy.
I think that is maybe the word that needs to be killed is regen,
Yes.
Yeah.
because none of them are regenning right now. So maybe let's go focus on regenning first, and then we can go call them regen.
Big time.
All right, what else we got here?
Let's go to Greg. We have 2 minutes left, so I think looking through, basically Greg Eisenberg dropped like a list of like 18 things that he said it's what's keeping me up at night. But he's very plugged into kind of creator economy, kind of future business models of the internet, what's happening in AI, and I think a bunch of these are actually pretty interesting. So I think we could just kind of walk through them and pull some out and kind of talk about them. So I think this. Yeah, what do we want to look at here? So, I mean, I can just, what's number 3 here? We're seeing the entire cost structure of building businesses collapse. You can now build profitable companies serving tiny, weird niches that were impossible to reach when you needed a full team. What used to need 1,000 customers to break even now needs 10.
Yeah, pause on that for a second.
Yeah.
This is actually, a dynamic that I've been really interested in crypto is how much value can be created with a significantly smaller user base.
Mm-hmm.
And seeing that show up in sort of AI lens, where it's like, okay, you can make good revenue off of a significantly smaller user base.
I mean, Pump.fun, like what, 30,000 users, like maybe the fastest company to like $100 million in revenue of all time. Like that's insane. It's insanity.
Yeah. I think OpenAI probably beat them, but yeah. Yeah, I think it's crazy, and it calls into question, like, so if you're looking at venture, you're looking at startups, all these are being done through the lens today of how do you get to $10 billion, and so there's a long tail of funding and building opportunities that are being unlocked here.
Peace, go up to number 5. I like that one too.
No,
really big arbitrage opportunity to buy businesses without taste and add taste. Taste private equity has a nice ring to it.
I mean,
I feel like we were talking about that a bit this week, right, Jesse? You were like, we should go buy some protocols that have some revenue that are just doing a terrible job, either like on the branding or distribution side. And
if you could just like find an ideologically focused protocol, probably focused on DeFi, that has been forgotten. Like, there's a lot of things that I was looking for protocols that throw off revenue, and it's not a large number. But my gut was that there's probably some in the longer tail. Like if you look at what Clanker's doing, it's not going to be in the top 1,000 market cap tokens, or maybe it is, I don't know. But it's disproportionately throwing off cash, right? So my guess is there's a bunch of those ones, and so those would probably be interesting opportunities. Or there's ones that have just been kind of dying on the vine a little bit, and you could reintroduce some taste or brand or whatever, and probably get a bump out of it. Not where I want to go spend my time, but I think that exists. But I mean, on this taste arbitrage, my wife has opened her store here in this little town that we live in, and has immediately stood out as a star on that block because of taste. You walk into the store, you're like, oh, everything has a place. It makes sense, good vibes, etc. And then you go walk into the store next door, and it feels completely different. And so, and you see that in the number of people that walk into her store, the activity that's happening on her social. Like everybody's like, "What? How are you such a marketing genius?" And she's sitting here saying, "Like, I am literally hanging on by the skin of my teeth, just doing the bare minimum that I think I need to go do." But that taste and consistency is the thing that kind of comes out. And so,
I mean, especially in this world of like zero cost content software creation, like taste, community brand gets increasingly important.
Can I just dropped a link in the chat, in the StreamYard chat piece. this thing I saw, I think Toby Luque share today, blew my mind. So I want to just add it in here. It is from sesame.com, and it is a model specifically trained to be incredible at conversational voice. So I don't know if you have audio coming through piece from your computer, but if you just click on Maya or Miles and then just have a conversation and
Oh, you can't hear it, can you?
Can't hear it. So I'll just leave it. We'll drop it as a link, maybe in your follow-up, Josh. But it is, it feels like you're having a conversation with a person. Like they found a way to match tonality. I'd asked Maya, tell me about the tech innovations that have gone into this specific model. She starts going in a big long-winded way, and I was like, oh, I don't want to hear the long-windedness. Just give me that. She's like, and her tone of her voice changed, and she got really direct. And I was like, okay, you really won't know if you're talking to a human being with this. So, and then this was on the heels of, I think, I remember the team that launched a translation model specifically that has like, significant better correctness, I guess, and multiple languages. So we're seeing all these like specific purpose-built tools now like that, and they're just going to be able to deliver at a ridiculous level.
Did you see the demo where the agents realized that they were talking to another agent, and then they switched to like whatever higher bandwidth? I mean, it was clearly like this fake demo, but it was freaky on so many levels.
Well, it doesn't make sense that these agents would be talking to each other typing out text on screen,
Of course.
I don't know. But Grok, if you haven't tried Grok, it is performing better for me than OpenAI on the most recent.
I think apparently 4.5 kind of sucked. I'm seeing a lot of people
I think it's just not a reasoning model, so people are trying. Yeah, I think you have to use it a bit differently. But Grok answered that question better, faster, more correctly than the others did. Wild times. All right, we still have. I mean, I'm interested in getting into Time.fun in the future. I think we saw.
Yeah, we can bring it back.
ZeroX, because this is just one of those ideas that keeps bubbling up, and I'm like, is this a tar pit idea? Is somebody actually going to figure out how to make it work? I think it's a tar pit idea, but ZeroX designer is making tens of cents on it right now, so could be a thing. All right. I just like everybody to know it feels like spring here in Vancouver. For those of you that are in very cold places, just wanted you to know that. And maybe the right thing to leave.
Golf season. Yeah. Golf season's coming, right?
Up, baby. Let's go.
There you go.
All right, y'all. Anything? You got cool shit coming. Stay tuned.
One day we will talk about it.
One day. Yeah. All right, y'all.
All right.
Hope you all have a wonderful weekend, and we'll see you next week.
Internet Explorers.